Guys, we have exciting news. We have influence on this channel, at least over some small coins. What do I mean? Let's take a look. Remember a couple of days ago, I said, it's ridiculous that you can't buy SNEK energy through drink with SNEK. Well, boom! Boom, to kick off, SNEK is and will be the only cryptocurrencies accepted on SNEK.energy. They are now accepting SNEK as payments, so they listen to me because I made a big deal about this a couple of days ago. Now, I think it was me because the SNEK energy drink has actually been out for months, but only now have they actually accepted SNEK for it. So we have influence, people. This channel has power. We're almost like the fat cats. We have so much power and influence. All right, that's it for the delusions of grandeur today. But either way, you can get your energy drink with SNEK now. So there is an absolute value. I'm not exactly sure how many SNEKs it costs, but you can actually buy it with SNEK, which means you can actually spend it on a physical product, people. And if if it's like 20 SNEKs or something, it's more than 20 SNEKs, obviously, but if it's like 20 SNEKs or something, that means one SNEK is at least 1/20th of an energy drink. So buy your energy drinks up and get some SNEK. There is a use case for the coin. Amazing. We have a lot of influence here. Okay, maybe not that much, but at least some influence here. In other news, the Bitcoin ETF from BlackRock, the Cabal, has invited more members of the Cabal to participate. That's right, the fat cats are winning again. And what this says is that BlackRock's Bitcoin ETF now invites participation from Wall Street banks. There's a change in the proposed structure of the ETS that would enable authorized participants, or APs, to create new shares in the fund with cash rather than only with cryptocurrency. So it's going to be both cash and cryptocurrency. This might have been what the SEC wants because it allows their buddies, the fat cats, to dominate crypto. So basically, this essentially opens the doors to banks who cannot hold cryptocurrency directly. They can hold these shares. So that means there might be more purchasing as well in crypto, which overall is good for us, but it means the fat cats can hold a lot of crypto. So BlackRock recently made it so authorized participants, a vital part of the ETF ecosystem, will be able to create new fund shares with cash rather than only with crypto, as highly regulated US banks are unable to hold Bitcoin themselves. This setup would enable the likes of JP Morgan and Goldman Sachs, firms with some of the largest balance sheets in the world, to act as APs to BlackRock's ETF. So Jamie Dimon might be changing his mind about Bitcoin again once JP Morgan has some of this ETF, because obviously Jamie Dimon does not want to FUD his own bags. He's smart like that. These fat cats are like, we got some of this now. Best not make the value go down. So I think Jamie Dimon might be singing another tune. And remember, we all know that this is going to succeed because we know that Google has recently changed their policies specifically so they're able to actually advertise these ETFs starting at the end of January. And we know that Google knows things that we don't. So I'm pretty sure it's coming. Obviously, it's not 100% a signal, but it is definitely a signal that the ETF is definitely coming. So the thing is, like, a commonly held view up until now was that APs would be large market-making firms with experience in crypto, such as Jane Street, Jump Vault, Jump Trading, and Virtue, not banks. But this particular change has actually allowed banks to actually come in and buy that Bitcoin ETF and manipulate it to their liking. It's probably why they passed it, because BlackRock is in alliance with a lot of these banks. And maybe, just maybe, they needed to convince JP Morgan and their CEO that Bitcoin was a good thing. Well, allowing it this way so JP Morgan profit a lot from it just might be the way for them to do it. And like I said, the JP Morgan CEO might be singing a different tune very, very soon about crypto as he realizes, it's a big market and JP Morgan, as a fat cat, can make a lot of money from it. So that's how it's changing. Vechain is launching a new marketplace. Hopefully this will actually help the price of Vechain. What they're doing is they're launching a node marketplace for both economic nodes and X nodes. So people will be able to buy and sell directly on their app. So this is actually pretty nice. It makes trade more significant. And I know they're probably redoing the tokenomics between Vitho and Vechain soon. So for the uninitiated, the Vechain node reward system is designed to give user incentives for keeping VET tokens and operating a node, which is good. We need incentives for users to hold node. I wish they would revamp their DeFi so people would hold more Vechain to farm and stuff. Participants can earn different rewards such as Vitho tokens utilized to cover transaction costs within the Vechain network. The launch of the marketplace is a move by Vechain to bolster the functionality of this node's reward program. It provides users with a centralized hub where they can view listings, place bids, sell, and transfer nodes. And they confirm that they will include the marketplace as a tab on Android devices for WeWorld, the self-dedicated custodial wallet. The new marketplace is the latest push from the team. The marketplace also allows users to view the current market of their nodes. So hopefully this actually gets people to want more nodes. It'll make buy and sell easier, and hopefully that creates a bigger economy for VET. So I want to talk about the Fed rate comments today, or like the Fed, CPI comments today, because that's always a big factor. Now, it did come in 0.1 above where it's expected at 3.1. That's still down from 3.2 last month. And the core CPI fell to 4%. Which is still above Fed expectations, but it is going down. The markets did not seem to react, at least on the Dow. Oil still went down, but the Dow index generally went up, and that's good because they're seeing that their policies are having some effect. With inflation down to 3% overall and 4% core, I do not think they will raise interest rates anymore, as it would be too devastating to the economy. Some of the smaller banks are already having a lot of trouble keeping up, and they don't want to induce a sudden collapse of any sort. So people are expecting Jerome Powell to keep the interest rates even. However, that 0.1% above might be disheartening to some people. However, oil is continuing to go down, and I think that will bring the rest of the cost down in the months going forward. I'm seeing gas prices around the Wisconsin area drop to as low as $2.50 now. It's actually $2.71, $2.69 right outside my house. But coming back from Missouri, I saw $2.51, $2.52, and that was a few weeks ago before it really dropped under 70. So we might be looking at oil prices or gas prices under $2 in the coming year. These are pandemic era prices, the lowest they've been in decades, and they're not caused by people not spending anymore. People are still spendthrifty as ever, even if you adjust for inflation. I guess people got used to easy money over the last 10 years since 2010, and they can't give that up, even though they're having to pay interest out the ass. And that's why credit cards are piling up. But consumer spending is as high as ever, so people still have money to spend, obviously. And gas prices are still coming down despite it. That's mainly because of weakened demand from both Europe and China. So I don't think they're going to be able to hold up. And the U.S. oil production is as high as ever. I think that we just hit all new all-time highs for oil production earlier this month. So the oil market looking for Russia and for OPEC is not looking all that good. And there are rumors that Saudi Arabia wants to flood the market to drive out U.S. from competing for them in the future, and at least temporarily that would push oil prices down even more. We're talking $1.50. I mean, I haven't seen $1 gas or less in 20 years. I don't think that's possible, but $1.50 or less I think is actually in play. If Saudi Arabia does that, that'll be the lowest oil prices in the last 20 years. I have not seen that since early in my college career. After we invaded Iraq under Bush, that basically all went away, more or less. And I haven't seen that since probably 02, 03 maybe. No, even in 03 it was 160. So under 150, may even be before 2000 that I saw 150 or below. So that would definitely bring costs down. Natural gas is going down as well. And everything is going to be determined by these energy prices. So that will actually, I think consumer confidence, because the oil prices are falling, is also being bolstered. And that's why people aren't holding back on spending anymore. Economic outlook is looking better, and they're projecting projections are like by the second half of next year, they'll start taking down interest rates. It might even be before that. So that's going to leave people with more money to buy things like crypto. So overall, the market over the next year is looking very, very bullish. Definitely wouldn't sell the coins now unless you're like a day trader. I think it's too dangerous to sell the coins now, and I do think they're going to hit new all-time highs come next year. So you will be missing out. If you definitely will be missing out if you like sell them right now and we suddenly go for a run. You can see the recent retrace basically bounced at 40K and hasn't gone down after that. I don't really know why it's going down today, probably because of the whole Elizabeth Warren stuff. But let's remember, those like Elizabeth Warren's has like a 3% chance of any bill that she proposes actually being accepted. Yes, there are 9 senators adopting it, but I doubt it's actually going to get past the House. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.